Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time.
Good morning.
And
Ira Epstein of Linn Associates with your morning flash update for this Tuesday, the 9th of January, 2017, about 9:25 a.m. Central Standard Time. All right, friends, do you hear that whoosh sound? It's, again, the vacuum cleaner of the stock market taking money out of everything else and it just rushing into this market. It is a combination of the market saying everything is rosy, not only here, but around the world. Interest rates, if you go back, you're at around 2.5% now on the 10-year. We haven't been at this rate in a very, very long time. Is it the beginning of a trend to even higher rates, or is this just a bleep in the market? A lot of traders confused on that. Dollar up, euro down, Canadian dollar down. But the real play today was the Bank of Japan surprising the markets by switching and tweaking their bond buying program and now saying they're looking at yield more so than asset. Is it a one-off deal? Is it a change to the loose monetary policy? Could this be the beginning of them tightening up? Traders are trying to get through that. Tomorrow, you're going to hear, do we approve in crude, or does the president approve the Iranian deal or not? I mean, time is running out. And that brings into mind that we're 10 days away from the U.S. potentially running out of cash. There's a meetings now going on at the White House. They're bringing in the Democrats. The Dems, as usual, are saying they're going to tie the DACA to this and that, and the president can't have his wall. We will see if the U.S. goes anywhere with it. But the one market it doesn't seem to impact, stocks. They're just continually, this is what, 5-6 days now up in a row. So you got to watch that. As for the news of the day, the U.S. NFIB Business Optimism Index down a fraction to 104.9 versus the prior month, 107.5, but still a solid number. Bank of Japan shifting some bond purchases to specific yields, which is different than they've been doing. European Union Statistic Agency said today that the jobless rate fell to 8.7% in November from 8.8 in October, and that's the lowest it's been since 2009. And yes, that's a lot higher than a lot of other countries, but it's been how it's been there. Germany's industrial output, this is why the surprise in the euro down so much. It grew 3.4%. They were looking for 1.9. So that's really a stellar number, and the market's not able to overcome the psychology that maybe come January 25th, the ECB is going to say, you know, maybe we have to begin a different policy right now. Maybe we have to tighten up or whatever. Concerns. Yet you would think if they're doing that, what does it mean for the value of the euro, which is falling? Because all this is good news. Germany's adjusted trade balance, 2.3 billion euros versus expectations of 21 billion euros. So strong there. Last Canada's housing starts, they felt, this is a big number, 13.8%. You would think maybe that would affect the Canadian dollar. Well, it did. The market is down 34 points. So there are some things at work here that are making sense, but there's a lot that isn't right now. And I can attribute that in part to the beginning of the year, traders coming back to their first full week of trading. Now remember, on Monday, you have the Martin Luther King Day. So again, trading gets abbreviated, if you will. We won't be in the offices on Monday. So this is the first full week of trading. Then we have only 4 days after that. With that, I'm Ira Epstein. Keep up with us later in the day in our other videos, and I'll see you then.